I think that's a lot of short-term noise. I think Trump will come out winning, as he proved with Mexico. I think the Trump playbook is simple: talk harsh, then back off, cut a deal. I think we'll see a deal with China this year before the midterms.
Before the midterms, even though the Chinese have said specifically no talks until after the midterms.
Well, if you look at Alibaba stock, down significantly since the early part of the year, Tencent down significantly, the Chinese web infrastructure down significantly. I think they're putting significant pressure on some of Chinese biggest equities, and I think they're going to break them before the end of the year.
So the stock market will outweigh President Xi's push for China 2025, which has been basically the cornerstone of the Communist Party's promise to the Chinese people.
I think they need American dollars to do that. And when we see some of the biggest stocks in the world trading at 30% off of their highs, I think that'll break President Xi.
All right, Mark, what do you foresee? You know, what struck me this morning was, as we all get back to work here, was Barclays was out, first thing in the morning with their base case scenario for the economy, and they say now their base case scenario is 20% tariffs on all goods from China, with the Chinese responding in kind. So there is a change in tone in terms of how this is being looked at by economists. Have you changed the way you're looking at the situation now that we're into September without any more progress?
Haven't really changed it. I don't think it'll have that much of an impact on the U.S. economy. There's a lot of attention as to what it means for prices on consumer goods, but it's actually been fairly modest. And I think the real impact has been that we've seen slower global economic growth, a little bit more uncertainty in the global economy, and some of the commodity exporters have weakened. But I think we're going to weather that. We have very strong momentum in the U.S. economy right now. And the consumer is in so much better shape than we thought they were. Those revised GDP figures showed that we had trillions of dollars of more in saving than we thought previously. So we've got strong momentum going into the second half of the year. We're looking for 3% growth in the current quarter and close to that in the fourth.
Mark, Josh was clearly outlining just there how some Chinese stocks are feeling the pain of this trade war. What about the Chinese economy overall? Is it feeling a similar amount of pain or fairly resilient?
It's feeling a lesser amount of pain, but it's feeling some pain. I mean, the Chinese economy has slowed. There's no doubt about that. I don't know that it's going to push them to do something sooner than the midterm election, because I think that they feel that they would likely have a little bit of a stronger hand afterward rather than before it. So I doubt that it gets pulled up, but anything's possible. I mean, it is at the end of the day, and I hate to say that, but there really is not. There's not that much mystery what has to happen here, in that the United States is basically is playing free is the freest trader of them all, and Trump has a case that we have been taken advantage of in many of our trade relationships. They need to be modernized, and I think that we don't have to have that much movement on the part of the Chinese in order to have a meaningful impact on the global economy.
Josh, you sound pretty bullish in terms of how you think trade will resolve itself. So are you recommending that people buy at record highs?
I do see technically we're due for a little pullback from about now into Columbus Day. But I think mid-October will be a great
just before the elections, you want to reload.
You want to lock and reload. I think we'll see a massive Trump bump towards the end of the year.